Monthly Market Report for December 2024. Market movements. The VN Index ended December on a strong note, gaining 1.3% and closing the year at 1,266.78 points. This reflects a 12.1% annual increase, nearly matching last year's performance of 12.2%. Trading activity remains strong in December, with the average daily trading value edging up to $575 million compared to $561 million in November. Market sentiment improved significantly as foreign selling pressure eased. Net foreign outflows in December dropped sharply to just $88.5 million, a dramatic improvement from the $468 million recorded in November. For the full year, total foreign net outflows stood at $3.2 billion. The market's resilience was bolstered by encouraging macroeconomic data, including strong fourth-quarter GDP growth of 7%. Additionally, the Prime Minister's resolve to achieve an ambitious 8% growth target by 2025 further boosted investor confidence. Sector performance. In December, most sectors posted positive results, with IT, consumer discretionary, and financials leading the way, while energy weighed on the broader market. The IT sector surged by 5.4% month-on-month, taking the spotlight. Gains were driven by NVIDIA's collaboration to establish an AI research and development hub, reinforcing Vietnam's role as a hub for tech innovation. Consumer discretionary rose by 2.4%, supported by robust year-end shopping activity and strong earnings forecasts, highlighting resilient consumer sentiment. Financials climbed by 2.3%, bolstered by solid performances in insurance and brokerage stocks. This was fueled by optimism about favorable interest rate trends, potential inclusion in the FTSE Emerging Markets Index, and speculation around the launch of the KRS system in early 2025. Banking stocks added to positive momentum amid rumors that year-end credit growth was nearing the 50% target, aided by broke policies. In contrast, the energy sector underperformed, falling 3.6% month-on-month. A 6% drop in PLX weighed heavily on the sector, offsetting stability in other energy stocks. Macro review. For GDP growth and key sectors, in 2024, Vietnam's economy expanded by 7.1% year-over-year, exceeding the government's target of 6.5 to 7%. Key growth drivers included manufacturing, up 9.83% year-over-year, services, up 7.4% year-over-year, and agriculture, up 3.3% year-over-year. Within the service sector, transportation grew by 10.8% and accommodations by 9.76%. The GDP side reached $476 billion, with per capita income rising to $4,700, solidifying Vietnam's status as an upper-middle income country. Regarding the Consumer Price Index, or CPI, inflation was well controlled, with the average CPI increasing by 3.63% year-over-year in 2024. In December, CPI rose by 0.29% month-on-month and 2.94% year-over-year, driven primarily by higher food, rent, and sector costs. Retail sales grew by 9% year-over-year in 2024, with December recording a 9.3% year-over-year increase. Accommodation and catering services expanded by 12.9% year-over-year, while tourism surged by 16% year-over-year, reflecting strong domestic consumption and a robust recovery in tourism sector. In 2024, the Index of Industrial Production, or IIP, rose 8.4% year-over-year, driven by a 9.6% year-over-year increase in manufacturing, underlining strong industrials activity and export demand. In terms of trade balance, in 2024, exports grew by 14.3% year-over-year, while imports increased by 16.7% year-over-year, resulting in a trade surplus of $24.8 billion. In December, exports rose 12.8% year-over-year, and imports climbed 19.2% year-over-year. For foreign direct investment, or FDI, the spurt FDI reached $21.7 billion in 2024, the highest since 2012, marked a 10.6% increase year-over-year. This reflects Vietnam's sustained appeal to foreign investors. Regarding monetary data, credit growth reached 13.82% year-to-date, supported by flexible policies from the State Bank of Vietnam. M2 liquidity grew by 9.42%, while deposit growth moderated to 9.06%. Lending rates averaged 6.7 to 9%, down 44 basis points year-to-date. Public investment disbursements totaled $20.8 billion in 2024, achieving 78.1% of the annual target, highlighting ongoing challenges in execution. This year, in tourism, Vietnam welcomed 17.6 million international visitors, a 39.5% increase year-over-year. This represents 97.6% of pre-pandemic levels, driven by strong recoveries from China and other key markets. Market view. The outlook for Vietnam's equity market remains bright, driven by strong domestic fundamentals and improving global conditions. The government's pro-growth agenda, highlighted by an ambitious 8% GDP growth target for 2025 and accelerated public investments, lays a solid foundation for economic expansion, progress, and regulatory reforms, including the implementation of non-pre-funding and preparations for the KRX trading system, strengthens Vietnam's case for a potential upgrade to emerging market status, which could attract significant foreign inflow. Macroeconomic indicators through November reinforce this optimism with robust export performance and stabilizing interbank rates. These factors are expected to enhance market liquidity and investor sentiments heading into 2025, with structural reforms, fiscal initiatives, and economic resilience working together. Vietnam's equity market and broader economy are poised for a promising year ahead. That concluded the market report for December 2024. Thank you for watching and stay tuned for more updates.